Welcome. This is Atcoin Day Trading Cardano, the best Elliott wave analysis, episode number 12. So today I'm going to talk about Cardano. I'll take a look at its Ichimoku cloud and afterwards at its Elliott wave count. But first I want to take a look at my Telegram because I have posted something that I want to discuss with you. So I start with Telegram and then we move on to Cardano. In my Telegram, I'm going to talk about inflation and the Fed. So now you should see my Telegram. And first, I want to give you the result of the poll that I did. And I ask if debt, Jubilee, austerity measures or hyperinflation, which one is the most likely? People could just give one answer. And most people said hyperinflation is the most likely. And they are probably right. But a big amount of people also thought that debt Jubilee was a possibility. Nobody was thinking about austerity measures, but I think that they could happen. I think that everything can happen, and that most likely is hyperinflation in most countries, then debt Jubilee, and lastly, austerity measures. Where I am, actually, hyperinflation for now doesn't look that that imminent, but austerity measures could happen, and I don't know how much debt Jubilee they did where I am, but in my place, austerity measures could happen. Anyways, it's just the result of the poll. Now, that being said, I want to talk about the Fed and its money printing. The Fed realizes it must shrink its balance sheet, but it is resistant to do so, as we will see by looking at the current situation. The principal topic contemporarily, of course, is the certainty that consumer price inflation is galloping at an annualized sequence of about 7% in the US. It's endemic in Europe too. And here too, the Fed is nevertheless printing money via its assets purchase program. So we have 7% of inflation according to real numbers. If you look how it was calculated in the past, it's much more than that. And that's a lot. That's really a lot. And it's endemic in Europe and in the United States. And still the Fed is pushing its money printing via its asset purchase program. The Fed is tapering this money printing, slowing it down, but it is still coining new digital Fed tokens in order to acquire treasury bonds, corporate debt, and mortgage-backed securities. So the Fed is still injecting money in the system. It is only doing it a little less than in the past. And that is contributing to the fact that we have inflation at, according to official numbers, 7%. In reality, much more than that. Now, the monetary base in the US generates what is shown as a historic money producing. So we are at a historic level of money producing. In the last 13 years, since 2008, it has ballooned by 760%. So since 2008, we have printed 760% more money as there were in circulation. So that's really a lot. The height of inflation had formerly devoured 33 years between 1975 and 2008. Now it takes only 13 years. So we are increasing the money supply at an ever-increasing rate. We take less time to print the same amount of money, and we keep on printing a lot. Some writers are put forward that the Fed doesn't worry about stock market this time around and won't be troubled if the market persists to plummet. So some public figures, which you probably know, like the guy from Rebel Capital List, Rebel Capital, or whatever his channel is called, thinks that the Fed this time around does not matter. And some economists on TV and others say that the Fed this time around does not care about the stock market. This is gibberish. This Fed, as it has stood since Alan Greenspan's day, wants to be comrades with the financial community, politicians, and the country at vast, and will try with all its vigor to stop a bear market in stocks. So even if some people think that this time around it's different and the Fed won't intervene and let the stock market crash, it is unlikely that that's the case, because the Fed wants to be comrades, as I said, wants to be friends with everybody. The Fed is agonizing about deflating its balance sheet since it knows that this deluge of printed money has been a foundation on which the stock market has risen. There's not an immediate causative connection. So it's not because the Fed is printing money that the market go up. That's not the case. What really is the case is a bull market in stock is driven by positive social feeling and a bear market by negative spirits. So when the spirits change, you go from a bull market to a bear market and vice versa. But it's the spirits of the people, it's their feeling that change. And it's not the money printing that dictates the price level of the stock market. So there's no immediate relationship between both of them. But regardless, the more money and liquidity there are in the machinery, so in our economic system, the effortless it is for a positive social humor to push the stock market higher. So people still feel better when a lot of money is printed until a certain moment. They still feel better about it. And since the feeling get better, they have more confidence, and then they put more money into the stock market and it goes higher. So it still helps a little, but it's not a direct relationship, because it still depends on what people are doing. Are they buying or selling? It's not just the Fed that counts, but the environment. And an environment with a lot of liquidity and low interest rates will give people more confidence to put money into stock markets. But it's still the people that make the stock market rise. And it's also the people that make the stock market crash, not the Fed. But the Fed, by playing around and creating inflation, pushes prices higher, but not directly, indirectly. The Fed put, when it comes to bailout of the stock market by an eruption of money printing, is explicitly noticed in 2008 and 2020. So in 2008 and a couple of years later, just 12 years later, in 2020, they started printing a lot of money again, twice, to help the stock market. As the speed of growth in the manufacturing of new Fed token was slowing, which is a deflation, from the end of 2013 to 2016, the cheerful rate of change in the stock market was also breaking. So as you can see, if the Fed throws less money around and creates less liquidity, less inflation, then people don't feel that happy. And if they don't feel that happy, then they won't make the stock market rise as much as in the past. And that's what happened between 2013 and 2016. A similar relation occurs from March 2021, and the same thing is happening again from March 2021. Since apparently from March 2021, the Fed was slowing down its processing of mortgage-backed securities and the rest. So when the Fed provides less liquidity, and that's what's the case again since 2021, the stock market climbs less fast. What the Fed is spooked of is a return of 2018, when its balance sheet was effectively shrinking, which is a deflation. And the stock market plunged, with the wild share 5,000 falling by 20% from September high into December. So in 2018, they were deflating, they were printing less money, and the stock market plummeted by 20%. And they are really scared nowadays that the same will happen. That's why they're still printing no new Fed tokens. They just do it a little less than in the past because of the 7% inflation. The Fed is extremely overcautious of diminishing its sick-gotten asset at this period around. So they are very worried about getting rid of their assets, putting them back in the market and letting their balance sheets shrink. They are very worried about it because if they don't provide that liquidity, they are scared that the stock market will crash. So it is obvious if the Fed can, so it is dubious if the Fed can tame inflation, and it seems likely that it will massively print money when the stock market is crashing again. So it is dubious, it is not certain that the Fed can tame inflation, that it can stop printing money, because if it does, the stock market will crash. By doing so, inflation will skyrocket. Okay, let me see what I was trying to say. So it is dubious if the Fed can tame inflation, and it seems likely that it will massively print money when the stock market is crashing again. So when the stock market is crashing again, just as they did in 2008 and 2021, 2008 and 2020, they will just print money again when the stock market crashes. It is likely that they will do it again. And if they do it again, this time around, once more, and they always have to print more money than in the past to get the same effect, if they do it again, it will, inflation will skyrocket. So people, when I ask what they think is most likely, they said inflation. So they're right. My analyst says the same. Inflation is the most likely because the Fed will, when the next crash happens, they will simply print again. A lot more than in 2008 and more than in 2020. They will print like if there's no tomorrow. And by doing that, inflation will skyrocket. If the Fed does not print money, the market will keep crashing even harder. So if the Fed does not, what is unlikely, but if it does not, then the market will even crash harder. Then you get in a bear market that can last decades. And I don't think that the Fed wants that. So I think they will print. Will it be inflation or a market crash? Which will the Fed choose? So they can choose inflation by printing, or they can stop printing and choose a market crash, but they have to choose. And here's the thing, what they will do. They will do both, money printing and trying simultaneously to stop inflation. And both will happen, hyperinflation and market collapse. So both will happen because they try to do both. They will print and they will also try to stop hyperinflation, and by doing both of them, both will happen. A crash will happen because they maybe won't print enough, or the market does not react to it anymore, does not believe in it anymore. The good feelings don't come back, so they don't buy but sell, and the market will crash. So, but hyperinflation will also happen. Probably they will get both. They are so bad that they cannot choose one evil. They will choose both of those evils. So the Fed will make everything worse, as it usually does. So I think that all what they are what they did since their conception makes everything worse. And I think we would be much better off if they did nothing, if they did not exist. Just as the Bitcoin has no Fed, and that's why it's great. If there would be a Fed playing around with the money supply, it would be of no interest whatsoever. No interest whatsoever. It would go to zero. It always does. So it will make everything worse, as it usually does. That is what centralized organizations always do. It would be much better for every participant if the free market would be in charge and no money manipulation would happen. Then you would get real growth and inflation would terminate. So that's what would be best, if there was no central organization playing around with our life, our future, our money, the future of our children, but the free market would find its solution. When real estate gets too high, the free market makes sure that real estate enters a bear market, and that real estate becomes again affordable for everybody. But when the Fed and politicians and the government plays around and wants to dictate prices, like in communism, like under communism, and what they do in our countries, then everything gets worse. I just wanted to bring that to your attention. And while I'm showing you my Telegram, I would like you to invite you to join my free Telegram group, so that you have a second way of communicating with me. And now, that being said, I will switch to my disclaimer. Just give me a second so I can share the screen. Okay, if I did nothing wrong, you should be able to see my disclaimer right now. Yes, it should be fine. I'm just making sure, because I don't want to waste my time and have to do it all again if I don't share the screen, but it should be fine. Regarding my disclaimer, the link is in the description. Please read it so that you are aware that there are risks involved in trading, and my risk warning. And that being said, we are going to take a look at my services quickly, so that I can promote them. I'm still waiting for it to load. Well, I'm providing live Elliott Wave updates. Right now, I'm doing it only on BTC, but it might change in the future. I'll see about that. I I still have to think about it, but it might change in the future. But right now, I'm only doing it at on BTC. Those live updates will cost you 20 USD a month. You will get 1 to 3 updates a day. At least most of the time, it's more than that. Often it's 5 to 8 a day. And I'll give you a screenshot of my charts and comment them extremely precisely on the it, and we'll give you a comment, a description extremely precisely under my chart of what is happening. You will receive most of the updates during the week, a little bit less during the weekend. If you want to subscribe, you have to join my free Telegram group and tell me that you are interested. Then I will provide you the instruction on how to become a member. With those Elliott Wave updates, you also get updates on Ichimoku. I will give you the important thing that happened on the Ichimoku break strategy. With the Ichimoku break strategy, it will provide, which will provide confidence to the Elliott Wave count. Thanks to the Ichimoku wave strategy, you will get entry points, exit points, trading stop points, and those will help you with your trading. But Ichimoku will confirm our Elliott Wave outlook and give you good entry, exit, and stop loss points. All that you get for 20 USD a month, which is a great deal. So I highly recommend you to becoming a member of my private Telegram group, and by that being one of my private clients. You always can ask me questions. There comes a help desk with it, and I'll help you around as much as possible. I tell you which are the best books about trading, and it will guide you on your journey and allow you to become a better trader or a better investor. So I highly recommend it to you if the crypto market is interesting to you, matters to you. Now, that being said, the next thing I'm going to ask of you is to like and comment, please, so that other people can find this intervention, and so that I can read your comment. I always like reading them, especially when they are kind. And that being said, we take a look at Cardano. Now, on Cardano, what did happen on Cardano? First, I'll take a look at its Ichimoku. So if I look at Ichimoku, it's a one glance chart. So you can see that on Ichimoku, we are above the cloud right now, and that is bullish. It says it right here. And you can see it very fast because it's a one glance chart. So it's extremely, you know extremely fast if you are bullish or bearish, if you should take long or short position. Then we also see that the super trend is also bullish. And now we take a look if an entry according to Ichimoku could be possible. So for that, I will zoom in. And if you remember correctly, for the Kumo break strategy, which I'm using because it gives me enough time to have the Elliott Wave to develop and tell me if I should be bullish or bearish. And once Elliott Wave did that, the Ichimoku Kumo break strategy will confirm if we go long or not. And right now, you know that there are three things that are important for the Ichimoku break strategy. The first is that you break above the Kumo cloud, which is obvious, since it's called the Ichimoku break strategy. The next thing is that you are above the Tenkan-sen and the Kichuin. Now you can see that the Tenkan-sen and the Kichuin are below price, and that the Tenkan-sen is bigger than the Kichuin, which is what is required to go long. So you can give it a check. You can give a check that we are above the cloud, we broke out of the cloud, and you can give it a check that that the Tenketsen and Kitrin is in the right order and below the cloud, below the price. So you can give that a check too. The future Kumo must be green, and here you have a red Kumo cloud ahead. So that you cannot give it a check. So that's a failure, so you cannot go long. And the last thing that you must check is the Chiku, and the Chiku is the lagging span. And the lagging span right now is in price. It must be clear of price. So you must break through price and be above price, be away from price. And that's not the case. So the Chiku is missing and the future Kumo is also missing. So right now you cannot take a long position. You have to wait for every condition to line up to take a long position. And that's only Ichimoku. But to get high probability trade, you must combine it with Elliott wave count, with the Elliott wave count. So that's what we're going to do now. We're going to take a look at Elliott wave and see if Elliott wave is turned bullish on Cardano or if it is still bearish. If it's bearish, then you cannot go long because that's also missing for you to take an entry trade. You only want high probability trades that you make more money than you will lose. You won't make money every time, but if you take high probability trades and do a proper stop loss, according to Ichimoku, below the Kitrin, which is not far away from price, then you won't lose much when you're wrong. And when you're right, you nicely make money. So now we're going to take a look at the Elliott wave count on Cardano and see what it tells us. But according to Ichimoku, you cannot go long. Because important parts of the trading system are not giving you the green light. So here, as I told you, you had the correction, the ABC correction from the last bear market. Or I think it was last bear market, and you get an impulse wave up, 1, 2, 3, 4, 5. And that's up there. You don't see it because I need to pull it down, but it's there's a wave 1. And down here, you have a wave 2. Okay. So now I'm going to zoom in and we take a look at the correction from the top of wave 5. So let me zoom in. I'll take the 4-hour chart. So here was the top of wave 5, and it was 5 of 1. Let me see if I can show you that. Yes, 5 of 1. And then you started the correction with the wave 2 down here. Now the correction, if I can show it to you, firstly, you have a W, X, then you have a Y wave, then again X wave. You don't see it because it's a mess. On the 4-hour chart, you will see it better on the 1-hour chart. And down here, you have a wave Z. And the wave Z would finish in the corrective wave 2. Now I'm going to zoom in one more time to the 1-hour chart so we can take a closer look at its last wave development. So here again, you have up here, you have the X wave that I showed you. And down here, you will get the end. Well, that's fine. That will do. Down there, you will get the end of the Z wave. So let me just show you the X wave. I'm not talking about the detailed labeling because I did it in the last intervention and I wanted to be quite brief today. So I'm not going to go over all the labeling that I showed you, but you get the idea. And here you have the Z wave. So, and that was the Y wave. So you have a Y wave, then an A, B, C for its X wave, and now you get again an ABC, but the A is at the wrong place. Sorry for that, guys. I'm going to choose it. I think something went wrong because that A wave must be here. No, actually, it must not be there. Let me think. So you have an X wave. The X wave should have an ABC in it, but we are still at wave 3. Yes, so actually it's at the right place. It's just that it can go lower. And up here, you don't have a B wave. I'm mistaken. The B wave must be somewhere there. And down here, we would have an A wave, and then you would get the B wave. And then you would go down again for a C wave of Z to finish wave 2. So that's better. So let me just talk again about the X wave up here. You have the X wave, and the X wave will subdivide into an A, B, and C. Of course, it will take more time than that to accomplish that, but the A wave will be composed of 5 waves, and then you will get the B wave and the C wave, which will terminate the Z wave, and that will terminate the correction. Now, for the next move down, because we are seeing a triangle, and we are right now, we did accomplish wave 3. We're in the process of accomplishing wave 4, which is a triangle, an A, B, C, D, and E. I put it up here, but it's probably lower. It should probably be somewhere there. And from the E wave, you would get the thrust out of the triangle. Here, I did label it post triangle thrust. And the post triangle thrust is you take the start of the triangle. Wave A started here, from here. Show that to you, from here to here. You take that, that's what I did. It's the square. And you put it at the end of the triangle. So let's say the triangle stops here. And then you get the thrust down to here. So our target from the thrust of the triangle would be 0.835. That would be our target. And then you would get a B wave, corrective B wave, and then the final low down to finish the correction. And that's what I see right now on Cardano. And that's the labeling I would go with if I was trading Cardano. Now, always I find it useful to know what Bitcoin is doing and how close Bitcoin is to its bottom, or if the bottom already occurred. Because I think that Bitcoin is the most important piece of the puzzle. And if Bitcoin goes bullish, then the altcoin will follow. And if Bitcoin goes bearish, then altcoins will follow. So next to the analysis I showed you on Cardano, you should have the latest analysis on Bitcoin, so you can trade it according to the flow of Bitcoin. And be aware that when Bitcoin has bottomed, then it's probable that every icon has bottomed, and when Bitcoin has topped, then it's probable that every icon has topped also. Most of the time, that's what is happening. Now, that being said, I'll remind you once again to become a member of my free Telegram group, and to let me know if you are interested in my private channel, of course. And that being said, I'll see you soon for some more interventions. As I told you, I might be offering you some new content in the future, and we'll see about that. But I still have to see how it goes, and I don't want to talk too much about it today. But I will probably on my next intervention. So enjoy your time until then, and see you soon. Bye-bye.